Okay, can you see my slide?
Yes, ma'am.
Yeah.
Thank you everyone for logging in, and thank you, Yolera, for such an important talk, especially to SMEs as well. I think when we talk about resolutions and all those, it affects everyone. So which goes down to the structure of your business, which is very, very critical. And you know, when you are in business, you don't necessarily know that till there's a problem, you know what I mean? So it's a very, very important. Thanks for that. So I'm going to, my name is Mollen, as Lauren is introduced, as Yolero is introduced from the beginning. I'm the director of Brendmo Incorporated, which is a auditing and accounting firm. We specialize in tax, auditing, advisory, and financials as well. So today, my main focus is to try to look at taxes, different types of taxes that as small business we need to be aware of. So I know when you start a business, many small business owners, startups, or when you're starting your business, you think that you are beneath Sars scrutiny, or you think that I'm just small, there's nothing that comes, or that there's nothing that's going to happen. So to many people, actually, tax is a strange foreign, it's actually a strange foreign world to them. What I want you guys to understand in this is to say in South Africa, tax is levied on income and profit received by a taxpayer, which includes if you are an individual, if you receive income, you need to pay tax. If you are a company, if you are trusts, or any individual who receives income, trusts, companies, sole trader, partnership, and all those, you need to pay tax. So there are types of taxes that I want to just go through today. So to start with, I want to look at what are the taxes and reliefs, tax reliefs that the government have in place for small business as well. So to start with, there is what we call turnover tax. And I know very few people utilize this one because it's not something that is widely known there. So turnover tax, I wake up today, I want to start my business. So obviously you can't turn over. When I'm talking about turnover, I'm talking about your sales that you have made for the whole year. Maybe you can't turn over for the whole year $1 million. So which means there is actually a relief that is there if you are below $1 million, which we call turnover tax. So turnover tax is a simplified system aimed at making it easier for micro business to meet their tax obligation. So the turnover tax system replaces the income tax. I'm going to touch about income tax, VAT as well, provisional tax, or capital gains and dividend tax for micro businesses. So for you to qualify there, you need to have an annual turnover that is 1 million or less. So which means you don't necessarily need to pay provisional tax. You don't necessarily need to be on income tax, you know, but you'll be paying tax on your turnover. So that's turnover tax. So micro business that is registered for turnover tax can, however, elect to remain on the VAT system, because you know the VAT, you paid VAT, you charge VAT on your goods that you sell, goods and services, and you also claim VAT on whatever you have purchased that have VAT. So you can elect to remain on the VAT system. Turnover tax is worked out by applying a tax rate for the taxable turnover of a micro business. So what turnover tax does is, let's say you had sales, turnover, remember I said turnover, we're talking about sales that you've made for the whole year, for the annual. So if you have made a turnover of 335, that means you don't pay any tax. But you don't immediately qualify because you need to apply to be on turnover tax. That's why I said this system, small business, they don't normally know it, and they don't normally benefit and take advantage of it. So if you are 335,000 to 500, you are paying 1% of each R1 above 335 for that year. So if you are, so that's the tax table for turnover tax. Can you see that if you are below 1 million, you really need to be on this system if your revenue and your turnover is below 1 million, so that you can benefit out of that. But you need to apply on time, and you need to make sure that everything is in place for you to qualify for this. So this is kind of a tax relief that is there for micro business. So according to the qualifying criteria. So when you ask yourself now, who is this turnover tax for? I have already mentioned that if your annual turnover is below 1 million, you can qualify for that. Even if you are a sole trader, or even if you are an individual who is doing business, which is a sole trader, or in partnership, or a CC, or companies, or cooperative. So you can apply for this. So in so this is one of the relief, which is turnover tax that is there. So for other than turnover tax, under normal circumstances, we have corporate income tax, which is a tax that is levied for taxable income for businesses. And corporate income tax is 28%. But thank God, for the first time, there's going to be a reduction up to 27% next year. So if you don't have, you didn't elect to bond turnover tax, and you also not a small business corporation, or your tax has been calculated not under these two different tax reliefs that I've spoken about, you are likely to be paying tax on 28%. So it's very critical as well. So when you have your accountant or someone who is doing your books, you need to know how did they calculate your tax. So that's why this workshop is very important for owners, business owners to know. So you find out that maybe the person didn't also apply their mind, and they've calculated the little profit that you have earned at 28%. And maybe worse still, if you are below 1 million, that means you have lost out a big time there. And if they didn't apply the SBC that I'm going to talk about, which is another relief if you are above 1 million, right? So you end up paying 28% on tax. So that's one relief that I want you to note. So income tax in general, who is it for? I know that when you start, you can actually say, no, me with the 3,000, I'm just making 3,000. And you say, like what, I can't pay tax on that. So every company or other juristic person which is resident in South Africa who derive gross income of more than 1,000. So I'm sure every business will derive your income above that. Or you hold assets with a cost of more than 1,000, or you derive any capital gain, you sold your assets, your property or whatever, and you get a capital gain there. Or you had a taxable income. You need to be able to pay tax. You are liable to pay income tax there. So, or how do you pay tax, income tax? So before I just move on to the other relief, the SBC. So you need to make sure I have, especially recently, Sars is on the drive, and a hefty drive. Sometimes you know that I have registered a business, right? And I am not doing any, I don't have any profits. I'm actually still struggling as a small business, or I'm making losses. So there's no need for me to submit returns. It doesn't work like that. You are obligated to submit your returns. So for income tax, there are 3 types of returns that you need to make sure that they are submitted. There's one that we call annual tax return, which you will summarize everything that happens during the year, and you actually have to submit it by the following year's year end. So let's say your year end is February 2021. So by February 2022, you need to have submitted that annual tax return. Then apart from that, you need to do provisional tax. So provisional tax is to say, if my year end is February 2021, after 6 months, I need to tell us that I made a profit or I made a loss. So you need to make that a return. Even if you didn't trade, you need to submit that 0. If you don't, there are penalties for non-submission of returns. So it's very, very critical. So you actually receive an SMS now or a message from SARS that you have penalties. Then we're like, no, but I haven't done even anything on the business because you didn't submit your returns. So that's very important. So first provisional tax after 6 months, within your 6 months, then the second provisional tax is due on your year end. So remember I said your year end is February. So which means August, you need to do your first provisional tax. February 2022, you need to do your second provisional tax for that particular year. Then on that one, on your first and second provisional tax, if you had a profit, you need to pay over that amount equal to that first provisional and second provisional tax. So those are the three income tax related submission that you need to be aware of as a company. So there is something that, let's say I have underestimated, because provisional means an estimate. So let's say by year end, I have underestimated that I had made a profit of 50,000, but actually I made a profit of 200,000. You got to know about it after your financial statements were done and were finalized. You can do a third top-up payment, and this can be made 6 months after that year end, and you won't be penalized. If you don't do that, when you now do your annual tax return now, and SARS find out that you actually made 200,000, yet on your second provisional tax, you submitted 50,000. There is under provision penalty that you are going to pay. I always say that when doing financial statements for small businesses, we say this is unfruitful and wasteful expenditure, the penalty and interests, because you can actually use that money somewhere in your business, but you are donating it by not just following up or following the procedures that you need to be aware of. Then the other relief, remember we spoke about the micro business, those that are 1 million and less, is the SBC, which is the Small Business Corporation. So if for you to be a small business corporation, it means that your taxes will be calculated using the income, the rates, the table that I have shown there, but you need to be able to meet the qualifying criteria for SARS to recognize you as an SBC. So first of all, your gross annual income of the business must be less than 20 million. So if you are making less than 20 million, please, you need to make sure that you are paying tax using this table, not the 28% or the 27% next year. So you need to make sure that you are, to qualify, your gross annual income should be less than 20 million. The business must be conducted as a private company, close corporation, cooperative, or personal liability company. So no member or shareholder of the business entity must hold any shares or have any interest in another company, subject to certain exclusions. So you need to make sure that you qualify all those criteria for you to be able to apply this SBC. So the one thing that I have almost against this, the third one, is sometimes you just have another dormant company. You know what I mean? That is not trading there, but it's saying no member or shareholder of that business must hold any shares, which is something that I always think that I think it needs to be relooked. Because I know entrepreneurs, we like to open various companies, the training company, the watch company, and all those. You want to do a lot, but that can actually exclude you from that. The business may not be a personal service provider, and no more than 20% of the business receipts or accruals may consist of investment income and income derived from the provision of personal service. So when you tick all this, you need to ensure that you are applying this table. So which means if you made a profit of 87,000, you should not be paying any tax, right? Income tax. So if you made a profit of 87 to 365,000, you need to pay tax 7% of taxable income above that 87, which is quite good. If you apply this under normal circumstance, you'll be paying 28% after you made a profit at least of 550. So these are the tables when you are calculating the income tax. So it's very important to know when you get the financial statements, how was my tax calculated? So am I on micro business? Am I on SBC? Or I'm on the corporate income tax rate of 28%. So you need to be watchful for that as well. Then the other, so that's income tax. The other tax as well is the pay as you earn. So pay as you earn. So I get a lot of questions where people say, no, when can I register as a pay as, where can I register my company as a pay as you earn employer? So employees tax refers to the tax required to be deducted by an employer from an employee's remuneration paid or payable. The process of deducting it is through withholding. So pay as you earn, it's a withholding tax. Let's say you employ your people and you say cost to company is 10,000. So what pay as you earn mean is to say out of that 10,000, withhold the tax equivalent to that 10,000 and give your employee the remainder after withholding pay as you earn and pay it over to Sars. So that's pay as you earn in short. So pay as you earn is just a withholding. So we have other companies as well that were found to say they have been withholding and they were not paying over that tax to Sars. Is something that is very, very dangerous because, you know, you would have told the person that your cost to company is 10,000 and maybe you are withholding 800 rands every month. You are not even seeding it to Sars and you are not even giving it to that person. So which is it's an illegal act. So pay as you earn, the amounts deducted or withheld must be paid by the employer to Sars on a monthly basis. So for you to do that, you need to complete what we call EMP 201, and you need to make sure that this is paid on the 7th of the next month, each and every year. So by the 7th of the next month, each and every month. So like for August, for July, 7th August, you need to make sure that you have paid over this. So let's say that month you didn't pay anyone's salary. Remember what I said, the rule for tax. You do a zero return. You need to do a zero return to say I didn't withhold any tax for anyone. So you need to do that zero return. It's a must. If you don't do that, there's actually, SARS made a change recently. There used not to be a penalty for non-submission of pay as you earn, but they've enforced it. So you'll be accruing penalty for not submitting. So that's pay as you earn there. Then what's new, like what I was saying, there is a penalty for late filing of pay as you earn now. This was introduced this year. SARS is still in the process of enhancing their dispute resolution. So you can find out that your account has been credited with penalties. So you need, for you to get out of that, that means you need to follow a dispute resolution and also maybe remission, ask for remission and all those. And it's a huge process and it's it costs you time that you don't have as a business owner as well. So apart from pay as you earn, we have what we call SDL. So SDL is skills development levy, is a levy imposed to encourage learning and development in South Africa and is determined by an employer's salary bill. So if your salary bill is more than 500 over the next 12 months, you are liable to pay SDL. So you need to be able to calculate 1% of your total amount paid in salaries to the employees via the SDL route. So you need to make sure that you are compliant around that. So you see, skills development levy, I always also say that SMEs, sometimes you are underutilizing because there are various sectors in this country where you need to look at, okay, which industry does my business fall in? Then you can get some intents to help you in your business. And those intents, they are paid by the different sectors, you know? So you need to be able to know which sector does your company fall into. And they'll be paid stipend via this SDL. So the SDL funds are the ones that help to have learners do their internship and they'll be paid by the government via that route, which SMEs can actually benefit from as well. Because sometimes you don't have money to pay the whole salary, you are still struggling. So if you put in those intents, it will also help you. Then there's also UIF. which is short-term relief to workers. So this is like in insurance when they become unemployed or unable, or they are unable to work because of maternity. Now we saw COVID happened in this world. So when you were paying UIF, or when you were your employees were contributing UIF, you are able to just claim if you can't pay them the salary or they are not able to work. So that is UIF. So with UIF, 1% the employer should contribute, 1% you should withhold it from the employee's salary as well and paid over to the Department of Labor. Then you are required by law to register. So some people will say, no, but I only have 2 people. You are required by law to register with the Unemployment Insurance Fund and contribute towards the fund if you have employed people for more than 24 hours per month. So whether permanent or part-time, so you are required to register with the fund. The monthly contribution for UIF is 2%, like what I said, 1% from yourself and 1% is withheld. You don't pay on behalf, but the employee contributes on their behalf as well, as withheld there. So that's UIF. So it's actually, you are obligated. So now they extended that if you have a domestic worker, you need to register that employee with the Department of Labor for UIF purposes. Then value added. So apart from, so this is the payroll related taxes or compliance that you need to be aware of. So if you are not complying with it, one way or another, your business can be caught out on that. I think the other one that I have left out is COIDA, which I think is on my next slide. So, but let's look at, let me just go to the next slide. Yeah, let me start with COIDA. So COIDA as well, some companies are not even registered for this one, but it's mandatory. It's compensation for occupational injuries and on duty. So the aim of COIDA Act is to provide for compensation in case of disability by occupational injuries and disease sustained or contracted by employees in the course of their employment, right? So any employer must register with the commissioner within 7 days after the day on which he employs his first employee. So whenever you employ your first employee, you need to make sure that you are registered with the compensation. Because let's say something happened, or your employee had an accident at work, or was contract a disease. Do you know some people were actually claiming for the COVID when someone got COVID at work? You know what I mean? So this is sort of like a fund that you need to claim from, compensation of injury and duty, although there were like strict regulation around that. So please note that a separate registration must be completed for each separate branch. Let's say you have different branches all over the country. You need to register each branch separately. And also the annual assessment fee is of an employer is, the annual assessment fee is based on their employees' earnings and the risk associated with the type of work. I think you know that if you are in professional service, there's less risk for someone being injured at work. But if you are in mining, there's a lot because there are equipment and all those kind of things. So the annual assessment fee for that, it depends on the risk as well as your employees' earnings, which means your salary bill. So you need to make sure that before 31st March of each year, all employers must submit a statement of earnings paid to all their workers from the beginning of March to the end of February to the department, so that at least there will be an annual fee that you need to pay to this fund, the COIDA. So I think that's one for employee-related taxes. Then we come to VAT, which is another tax as well that you need to be aware of. And I know most people know income tax and VAT because we pay them. We pay VAT on goods that we purchase, and we also charge VAT. So to start with VAT, as we know that it has increased from 14% to 15% and is levied on goods or services or that is rendered by the business. VAT on the importation of goods is collected by customs. There is a limited range of goods and services which are subject to VAT and zero rated, and some are actually exempt from VAT as well. So how do you, when are you required to register for VAT? So you need to be able to know there is two types. Sometimes you can register voluntary for VAT, or you are mandatorily required to register for VAT. So if your turnover, if your supply of goods and services is about to exceed or exceed 1 million in the following year, you need to register. When you reach 1 million, you need to register for VAT. But you can also voluntarily register, especially if you are dealing with government and other entities and other big companies. Because remember, if people purchase things from you, and if they are VAT vendors, they need to claim whatever they are VAT from the purchases that they are making from your company. So that will be voluntary as well. And you can do that if you anticipate that your goods or whatever you are going to purchase exceed 50,000. So that's VAT there when you need to register for VAT. So I think in a nutshell, that's it from my side in terms of the taxes that you need to be aware of. So I know I didn't cover a lot because we don't have a lot of time. I know I didn't cover a lot in terms of how best can you avoid the interest and the penalties, and also if you are found wanting, what are the steps that you need to take? Because I know when you receive a demand from SARS, sometimes you can freeze to say, where do I start? What do I need to do? So I think if you have any scenario or any situation, you are actually free to call for those that are in this platform as well for a free consultation on the below numbers, so that at least we can look at your situation and see how we can help you in that regard. I think I'm done, Lauren.
Thanks, Mollen. You have a question from Kodani. It's, is there a minimum income that an employee should be receiving in order for the employer to register for UIF?
Yes, so to register for UIF.
Yes.
Is it for UIF?
Yes. Is there a minimum?
No, there is no minimum for UIF, as long as you have employed someone that is more than 24 hours. But for tax, for pay as you earn, yes. So there is a minimum amount that if your employees is below, I think for now it's is it 6,500 or 7,000? They don't pay as you earn.
Okay. Any further questions? Oh, sorry, Mollen.
Yes, but I wanted to say for UIF, because it's a fund for unemployment, in case that person is not going to be employed, you need to calculate 1% and contribute there. So it's actually a good fund, insurance fund for your employees.
Okay, any further questions for Mollen? Please feel free to unmute yourself and ask questions or drop them in the chat. Mollen, a question from my side. You may have covered it. I've lost signal for a while there. But I know a lot of people register for VAT before they actually need to. Is there any advantage to doing that?
Okay, so I think if you are in a business, like in a service industry, and if you don't have supplier or customers that require you to register for VAT, and you are actually below the threshold, VAT is actually an admin. So you don't necessarily need to. So the advantage is if you are in, let's say you are in construction, you do a lot of purchases, you know what I mean? Then you actually deal with a lot of suppliers as well that are registered for VAT. Because let's say if you are buying a huge equipment, huge capital equipment, let's say of 100,000, and there's VAT there, you are able to claim that VAT from SARS. So I always look at companies and say, no, I don't think you really need to register for VAT if it's not mandatory, if you haven't reached the 1 million threshold. So it's better. But some now, when they deal with their their customers, they would want to deal with someone who is registered. That's why small businesses are sort of forced to also register, because they will say, no, but we can't even claim VAT when we purchase from you. Yeah.
Yeah, we also find that that's often the case. Thank you, Mollen. I think we have run out of time, but if you're willing, you could answer a few questions after the session if people are wanting to stay behind. So that's over to me then. Thank you.